Yeah, hello together. Welcome back to Business Taxation. And now, after some introductory remarks in the last one or two videos, now we shall concentrate on the real context of the lecture. That means, for example, corporation tax basis. Today, here we are, just at the very beginning. So let's think about what's going to come. The first thing which you naturally must think about is what is corporation tax? And let's try to define it in a way that we say corporation tax is the tax which replaces the income tax for juridical persons. So what the income tax is for natural persons, that is the corporation tax for juridical persons. Now, if we analyze that definition more closely, that implies corporation tax replaces income tax. That means an entity is subjected to corporation tax, then income tax does not apply to that entity. So it is exclusive, either the one or the other. Then corporation tax has been just defined as the tax which replaces the income tax for juridical persons. I did not say which replaces the income tax for the juridical persons or for all juridical persons, because that is, well, that's not correct in all jurisdictions of the world as far as I know. In Germany, it would be correct to say corporation tax is the income tax for the juridical persons, so for all of them. That's correct under German law. But when you go to some other states, for example, to England, there the corporation tax only covers British corporations which are resident in the UK and the permanent establishments of foreign corporations in the UK. The profits of foreign corporations which are not established in the UK would be taxed under British income tax still. So that is the reason why I was rather cautious in defining that. Well, if you have to deal with German corporation tax, the distinction is plain and simple. Natural persons only are covered by the Einkommensteuergesetz, the Income Tax Act. See paragraph 1, section 1 ESTG. And the Corporation Tax Act, the KSTG, Körperschaftssteuergesetz, only applies to juridical persons, whereas the term juridical persons is avoided there. They circumscribe it by speaking of corporations, masses of property, and associations of persons, but what they mean is juridical persons. Yeah. And now the first question is probably, why does there exist a separate law for corporations instead of the income tax law? And the answer is, well, the personal situation of the taxpayer plays a great role when it comes to income tax. We have a progressive tax rate, we have deductions for personal needs, special personal allowances, also called special expenses or Sonderausgaben in German law. You have allowances for extraordinary personal hardships, so extraordinary expenses. You have a tax-free amount each year available to you, which you need to cover your basic needs of survival, food, drink, and housing. All that makes no sense when you deal with a corporation, a juridical person, because a juridical person does not live and does not need to survive. Then another aspect, when I, as a natural person, earn money, I am going to consume that for myself. But when a juridical person like a GmbH or an AG makes a profit, the natural fate of that profit is in the course of time, perhaps not this year, but next year or the year after next year or at the end of eternity, somewhere it will be handed over as a profit distribution to a shareholder, and there it will form income again. So it will be taxed twice in the course of time, and that also makes a fundamental difference to what happens to the profit in the hands of a natural person. Because with such corporations, we can expect in the course of time a kind of economic double taxation. The same profit will be taxed first on the level of the corporation and later in due course at the level of the shareholder, again in form of a dividend. So also that makes slight differences very recommendable. Yeah. Good. Then, how do we work with cases in corporation tax? Now, when we once have found out, okay, juridical person, that's a case for corporation tax law, at least in nearly all cases in all cases in German law, then I would recommend we orientate ourselves at the same basic structure for testing a case as with income tax cases. So you begin with personal tax liability. Now that you know there are two cases or two taxes to distinguish, the first question is probably the best one. Is this a natural person where I have to deal with, or is it a juridical person? Because now that decides, do you have an income tax case in front of you or a corporation tax case? Naturally, if you deal with a partnership, you remember a partnership that was not one person, but several persons acting together, and each of these persons earns a share in the money, and each of that persons is a taxpayer. So if your first step then leads to the conclusion, I have to deal with a partnership, you directly split up the case into different cases. What is done by taxpayer A or by partner A, what is done by partner B, and what is done by partner C, because it might be a partnership between a GmbH and an AG and a natural person. In that case, the share of the first partner would be taxed under AG corporation tax law. The second partner, a GmbH, would also have to pay corporation tax on its share, and the third partner would be a natural person in my case. So a natural person pays on its income tax. So you always look to the individual person, what does that person earn, and decide is the income of that person taxable under under income tax or under corporation tax. Sorry. The next step would then be unlimited or limited tax liability. What applies here? You already know that from income tax. A second step would be the objective tax liability. So how do we treat the events which happen? Are they taxable? Are they not? Which type of income? And so on. First question, just to get some orientation, is usually which type of income do we have to deal with? Second, again, which type of tax base do we need? Is it profit or surplus of revenue over expense? And then to which year does the event belong? Because naturally, if something is, let's call it deductible expense or so, then it still plays a role if we have to deduct it from the income of 2020, 2021, or 2022. So this, if dates are available, also has to be cleared up. Naturally, now here you can insert a third step, namely calculation of the tax, summing up all the tax base and then calculating the tax according to the tax rate of corporation tax. You can compute the tax liability You can deduct prepayments in order to find out which final payment the corporation still owes to the fiscal authorities, or if they have a claim to a refund because they've made higher prepayments than what they really owe. Good. And a fourth and last entry in our testing scheme should be, does the case have any peculiarities which are not yet covered by our first three steps? And that is just a catch all the rest entry. So that just reminds you there might be things which the testing scheme doesn't cover. And for example, so you ask yourselves at the end of a case, did I really find everything? Or was there something during the lecture of the case where I had the feeling that should be commented and then I forgot it? And you also would memorize which topics or which questions can only be dealt with at the very end of a case. For example, there is something like the so-called contributions account, which can only be commented after you know everything which happened in the course of the year for the corporation. And you have the so-called loss carry forward, or there is something like a donations carry forward. What happens with these things can only be decided and said at the end of a case. And last but not least, also the credit method for the avoidance of double taxation can only be finally and correctly applied at the very, very end of a case. So that would be some of the entries which you somewhere store in the back of your brains and bring to light when you come here to the last entry in the testing scheme. Was there something of these things relevant for my case? What does the task really demand? So is there a hint that also these things can be commented, or am I already finished? That would be what is the relevant thing here. So to sum it all up, the testing scheme would be, and the corporation tax thing would be relatively simply memorize corporation tax is just the income tax for juridical persons, or when it comes to British law, it is a income tax for juridical persons. We also have the distinction between unlimited and limited tax liability there. So either we tax the worldwide income, you remember that, or the tax claim is limited to a certain inland income, and that is already the most important thing here. Good. Now, we just said that juridical persons are covered by corporation tax. So that makes definitively clear what the next point is over which we have to debate, namely what counts as a juridical person. We must bring back to our mind everything which has to do with juridical person, and we have to talk about some problems which might exist there. And that, ladies and gentlemen, will directly follow in the next part of, so in the next small video. Thanks until in perhaps a few minutes. Till later.